Hello, everyone, and good afternoon. I'm Joseph Sassoon. I'm a professor at Georgetown University and the director of the Center for Contemporary Arab Studies. I have the great pleasure in welcoming our guests from the World Bank who will be talking about their country economic memorandum for Iraq. Um, First, I will introduce Saroj Kumar, who's the regional director of the Mashreq Department covering Lebanon, Iraq, Syria, Jordan, and Iran. Wael Mansour, who is the senior economist um, at the Macroeconomics, Trade, and Investment Global Practice. Bledi Celiku, who is the senior economist also at the Macroeconomics, Trade, and Investment Global Practice. They will be talking about the report. Then my colleague, Professor Shanta Devarajan, who's also at SFS, will be discussing the report and the presentation. And then we will open it to Q&A through the chat. So in order not to waste any more time, I will hand it to you, Saroj.
Thank you very much. Good morning, good afternoon, and good evening, my colleagues in Baghdad, if anyone is connected. First of all, a big thank you, Professor Sassoon, and to you as well, Shanta, for the opportunity to the World Bank team to come and talk to you about the report we did on Iraq. A few kind of things to kind of set the stage for this report itself. First is that understanding of the development challenges in fragile context is a very big part of the thinking inside the World Bank Group for a number of reasons. One is that more than half of the world's poor people live in fragile regions. And by all projections by the World Bank, but also by OECD and others, at least 3/4 of the world's poor will be in fragile regions by 2030. So therefore, better understanding of the fragility is very much part of our development understanding and how we help our countries to really design development strategies, long-term plans and investments in a way to address the core challenges that are because of their fragility. And recently, the World Bank Group has launched a new strategy for fragility, conflict, and violence, a group that I was the senior director for some time before moving to Beirut, and I'm very passionate about all development professionals understanding the fragility a bit better, because otherwise the fragility sensitivity of our development interventions could be missing, and we may not achieve those real objectives. The second is that the fragile environments pose a number of challenges with regard to the political economy, sectarian challenges, the regional geopolitics, and of course, a big part of the whole inclusion agenda in the countries where we work. These considerations motivated our work on Iraq. So when we embarked on the country economic memorandum, which is normally something we do in every 4 to 5 years in a country, to really understand the opportunities and challenges in defining a new economic model, a new economic vision for a country. In the case of Iraq, given the Iraq's very unique situation where it had experienced a number of conflicts internally, but also externally with other countries in the region, it was very important for us to understand as to what Iraq had gone through, at least in the last 2 decades, and what options Iraqi policymakers had exercised, and also understanding as to, had Iraq chosen a different path of development, where Iraq could have been in 2 decades today. So the study that Wael and Bledi led, with very strong support from many colleagues from the World Bank, but also Shanta, I remember, was one of the peer reviewers, and Professor Sassoon, I remember you were also in our internal meeting when we were looking at the draft report. This particular report essentially looks at the nexus of fragility, political economy, and the development challenges in a country. because it's very difficult to isolate the development dimension, the socio-economic agenda from the broader fragility context. And particularly for Iraq is extremely important because one after another, Iraq has experienced several episodes of conflict and tension within the country, some low intensity conflicts, some almost on the scale of a war with its neighboring countries. I think very important to understand these dimensions as we kind of help Iraq to embark on a more longer term development agenda. So I think those considerations were extremely important to us. The last point I would like to make in the case of Iraq is that our motivation for doing this report is to help Iraqi government really embark on a new path for economic development, which is informed by these considerations, which have really pulled Iraq back. And I think this report has provided the impetus for government to put forward a new reform white paper, as they call it, which has been recently approved by the Council of Ministers. They have also adopted a new implementation structure, what we call the reform governance for the program. So I think the report has already demonstrated its value proposition in informing the policymakers what are the kind of options Iraqis would need to exercise. So I'm looking forward to the discussion today. Thank you again to the Georgetown University School of Foreign Service for giving us the opportunity. And I look forward to the discussion. Back to you, Professor Sassoon.
Thank you very much. I don't know whether Wael or Bledi, who wants to start first?
Thank you, Joseph. I will start first. Thank you, Joseph, for your introduction, and thank you, Saroj, for your remarks. My colleague Bledi and I are very happy and honored to be discussing this report today, the Country Economic Memorandum for Iraq at Georgetown and at this distinguished center. We truly thank the organizer, and we hope that it will be an interesting and stimulating debate. The report, as Saroj mentioned, was the product of a multidisciplinary team at the World Bank, which received invaluable inputs and advice from academia. Notably, we thank our two advisors on this report, Professor Sassoon and Professor Devarajan, as well as Iraqi civil society members and excellent collaboration from the Iraqi authorities. Also, this study was co-financed actually by a generous contribution from the Iraq Reform, Recovery and Reconstruction Trust Fund, established in partnership with the government of Iraq and supported by the UK, Germany, and Canada. It is a rich report, as you will see. So for the next 40 minutes, we will present the main highlights with the emphasis on this growth, fragility, political economy nexus. Much more details can be found in the report, including on the quantitative techniques used and sectoral analysis that are not covered by the presentation. For those interested, Bledi and I and the team will be very happy to engage bilaterally and go over any of the questions. Next slide. So before we go into the details, I would like to highlight what is a country economic memorandum. In the World Bank jargon, we say CEM, and why it is important for the World Bank. The CEM is a report that constitutes a part of the core diagnostic that the World Bank conducts for every country to have an in-depth understanding of growth, its characteristics, drivers, inclusiveness, sustainability, etc. By taking this medium-term approach, the CEM helps the World Bank and governments alike to formulate national reform plans. For example, as Saroj mentioned, this particular CEM, the Iraq CEM, was featured as one of the main analytical underpinnings of the Iraq National Reform Plan, which was adopted recently by the cabinet and which is known as the White Paper. The CEM that we are discussing today comes really at a difficult time for Iraq. Iraq is really at a crossroads. Almost 2 decades after the fall of the Saddam regime, the country remains caught in a fragility trap, facing increasing political instability, growing social unrest, and a deepening state-citizen divide. On top of this, the country is facing a dual shock, an oil price shock and the COVID-19 pandemic. As a result, Iraq is projected to have in 2020 its worst annual GDP growth performance since 2003. Next. So the objective of this report are: one, why Iraq has not achieved diversified growth and stability; two, what it can do to spur and sustain future growth; and three, how it can escape the fragility trap through economic reforms. Next. The novelty of this report is that it's a fragility-centric growth diagnostic, i.e., it is a report that tries to understand drivers of fragility in Iraq and uses a rigorous political economy framework, as we will see in the second part of this presentation with Bledi, combined with quantitative growth analytics to explain what the existing development outcomes in Iraq. It then takes this framework into consideration to devise a fragility-informed reform plan, or maybe I can say a political economy-informed reform plan, which we call in the report the strategic pathway for growth. This is a fancy word, I guess, for recommendations. So the chapters of the report are divided among those lines. In the first part, so next, we try to understand, in part one, we try to understand Iraq's fragility drivers and political economy challenges and what is their role in inhibiting and spurring growth. In part two of the report, we examine Iraq's growth and potential benefits from diversification. This is then followed in part three and part four by two deep dives where we do a diagnostic of Iraq's potential for trade and regional integration and the review of Iraq's agriculture sector, looking at the value chain from primary to agro-food systems. In addition to the importance of those sectors for growth, one can look at those deep dives as an application of the methodological framework we utilize. Next. What follows is a snapshot of Iraq's economic performance in the last decade and a half. This is important to understand because it tells us how Iraq arrived at this point. Next. Although oil wealth has allowed Iraq to obtain what we call the upper middle income status, in many ways its institutions and socioeconomic outcomes more closely resemble those of a low-income, fragile country. The bars here in the graph show the average upper middle income country values in percent, and the circle shows where Iraq sits globally in terms of its percentile rank for each of the selected indicators on the x-axis. For a country whose education once ranked near the top of the MENA region, Iraq has one of the lowest female participation rate in the world. Actually, it's in the first percentile. Iraq has also one of the low levels of human and physical capital and deteriorating business conditions. Iraq has also one of the highest poverty rates among upper middle income countries, namely a poverty rate of around 57% measured at the $5.50 a day poverty line. This is an upper poverty line. As you can tell and see, these are all outcomes of policy that should be long-term in nature. For example, you need a generation to see improvements in education outcomes or years to do investments in infrastructure and start reaping economic returns, etc. But given the short-term nature or the short-term framework that Iraqi policymakers operate in and the presence of oil, those policymakers have a large discount value for long-term decisions. Hence, we see deteriorating outcomes over the years. Indeed, this oil wealth has helped sustain a fragile political economy in Iraq. Instead of improving service delivery and public infrastructure, things that require long-term planning, oil revenue have been used to expand public sector employment and transfers. Again, short-term wins. The bottom line is, without improving its scores on these key indicators here, Iraq will find it increasingly difficult to grow substantially, sustainably, and equitably in the future. Next. Repeated conflicts in Iraq, in an inherently volatile oil economy, have not delivered sustainable prosperity. The recent conflict with ISIS in 2014 is a case in point. Iraq's recent conflicts have had significant economic and social costs. To get an estimate of this cost, we use a methodology called a counterfactual analysis, called synthetic control methods, where we ask the question, where would Iraq be today had it not been for the ISIS conflict? And we do that by creating a synthetic Iraq, if you want, sort of a control group, by relying on a combination of comparator countries that best approximate the characteristics of Iraq. So what do we find? This is the graph on the left. We find that the country's per capita GDP in 2018 was about 20% lower than it would have been without the ISIS conflict. On the non-oil side, on the non-oil economy side, the effect is much, much larger. The country's non-oil GDP is estimated to be about one third lower in 2018 than when the conflict ended, than it would have been without this conflict. Moreover, even Iraq's national poverty headcount is estimated to be almost 7% higher than it would otherwise have been. While such large effects reflect only one conflict, you can imagine the economic losses due to various conflicts and volatility since 2003. Hence, there is really an important dividend to acquire from maintaining peace. But the poor economic outcome is not only driven by conflict, it is also linked to poor quality of institutions and policy making. This is translated in losses in productivity and competitiveness in the real economy that have put non-oil GDP and non-oil GDP potential, the future potential, on a declining trend. There's also an oil dependency story linked to that, which we will come in a little bit. As such, on top of this peace dividend, there is an additional dividend coming from reforms itself, one that is even larger and could result in a completely different development outcome. We did such exercise in the graph on the right. We did such exercise where we looked at the magnitude of this missed opportunity for reform. And we found that if through reforms, Iraq had achieved a human and physical capital accumulation, an employment rate and labor force participation to levels that are similar to its upper middle income countries, Iraq per capita GDP, which is, if you want, an approximation of wealth per person, would have been 58% higher than it is today. This is a significant and transformative number. Explaining the failures in previous reforms attempts and why we didn't achieve this outcome is also something that we will go back to in this presentation in the second part. Next. Iraq's economic growth has been relatively robust, overall growth, owing largely to oil, but has masked significant volatility and weakness in the non-oil sector. Using growth accounting techniques, we observed more closely that the main drivers of growth in Iraq have been oil production, investment, and population growth, but not productivity. A supply-side growth decomposition of Iraq GDP reveals that the oil sector has been the main driver since 2005. This is a sector that has contributed the most to the value-added creation in the economy. This is not surprising, of course, but what is remarkable is that Iraq's wealth grew by 133%, one of the highest rates among resource-rich countries. Decomposing GDP growth further into productivities and the factors of production, which is what we observe in the graph on the slide, we can see that growth was driven by mainly capital accumulation. These are investments in the oil sector, which Iraq actually succeeded in raising its oil production to a record high 5 million barrels a day, with plans to reach 7 million barrels a day in the near future. And by labor accumulation, this is the green, the dark green. or the middle green, which is basically due to the population dividend that Iraq has, especially in terms of population growth and number of youth, as opposed to total factor productivity, which is the dark green, which even in the period after the ISIS crisis, during the ISIS crisis, have become negative. If we restrict the analysis to Iraq's non-oil economy, productivity performance since 2013 is even worse. TFP fell by more than 5 percentage points. Next. Hence, what we really observe in that wealth creation in Iraq is overwhelmingly driven by the depletion of its oil reserves and not by raising productivity and creating value added. In contrast to peer countries, as the graph shows, in peer countries like Malaysia, Colombia, or other upper middle income countries which have a natural resource or are all natural resource endowed country, wealth is derived from human capital and the more diversified economic base. This is not the case for Iraq, which compares more to an Azerbaijan case. Why is this important? It is important because the reliance on oil rents means that the Iraqi government is less dependent on the non-oil economy and the demands of the general public. Growth in the non-oil economy is divorced from growth in the oil economy, except through the patronage network and trickle-down effects of some government transfer or subsidy schemes. The ease with which oil income is generated and redistributed to maintain networks of power weakens the government drive to pursue growth-enhancing reforms. This is a powerful finding because such change happened gradually over time as a result of contestation at different levels of society and political establishment, something that the political economy analysis helped us understand. We will see how those dynamics operate as part of our political economy framework and delve into this contestation ideas in more details with Bledi in the second part of the presentation. Next. So the oil sector dominance has considerably reduced the external competitiveness of the Iraqi economy by amplifying what we call the Dutch disease phenomenon. Over recent years, Iraq's real exchange rate has appreciated, this is the line if you want, while its country peers, the bars, exchange rate have depreciated. This means that Iraq's tradable and more productive sectors have become more expensive compared to those other countries and have hence lost competitiveness. This is yet another roadblock to diversifying Iraq's export base away from oil. And for example, it makes it more difficult for Iraq's agriculture exports to expand and compete in the region or more widely. This is, for example, one of the arguments we make in the deep dive on agriculture. From a political economy perspective, a persistent appreciation of the exchange rate can be thought of as a kind of a subsidy for imports and importers over other economic activities and other segments of the society. It is an encouragement for more consumption at the expense of investment and private sector job creation. It is also a way to generate rent for certain groups, mainly those in the non-tradable sectors like real estate, and hence can be a powerful tool for political patronage distribution. Regaining external competitiveness is not only a key for economic diversification and a more inclusive and sustainable growth, it is also a redefinition, if you want, of the social contract that has been established given the societal change that this loss of competitiveness induces. But of course, competitiveness is not only regained by acting on the exchange rate solely, like the government of Iraq recently did when it devaluated the dinar. And this devaluation in economic term, we call it price factors. It is also tackling non-price barriers for competitiveness, such as regulation, legislation on the business environment, financial sector, the infrastructure gap, governance, transparency, all of these non-price factors. All of these reforms require consensus building and a long-term approach, in contrast to the modalities of government and policymakers, as we were saying earlier. I give it now to Bledi to delve more into the political economy framework and the pathways for growth. Bledi?
Thank you, Wael. And let me just say that it's a pleasure to be here and to thank Joseph and Shanta for hosting us. For me, it's also a small homecoming, since I spent a few years at Georgetown finishing my PhD at the Economics Department. So it's truly a pleasure to be here. So to pick up on where Wael left, on this remaining part of the conversation, we will touch briefly upon our political economy or fragility framework for the report as it relates to the growth model, and then discuss a bit these strategic pathways for reform or recommendations. Now the question becomes, why have reforms not produced sustained growth for and better living standards for Iraqis? There have been many previous studies by the World Bank, by other institutions that have emphasized similar areas, such as transition to a more peaceful society, transition to a more market-based system, transitioning away from the oil dependence, or being better integrated, especially with Iraq's neighbors. These are all recommendations that remain valid to this day, but little progress has been made. So what we chose in this study and this report to do is we attempted to do a thorough analysis of the underlying fragility constraints on development in Iraq and the political economy of reform. So I'll walk you briefly through this framework, and then we'll zoom in a bit over the three contestation levels in the middle. So in Iraq, we created this framework to explain the political settlement and the political economy of Iraq, that really at its center has three actors: state actors, non-state actors, and citizens. And there's contestation at three levels in this in the society. The first one is elite bargaining. The second one is the social contract bargaining, or these state, if you will, society relationship. And the third is the societal relations between different groups in Iraq. At times, these three have contestations, in a way have turned violent, and have been also ethno-sectarian groups, and differences between them have been instrumentalized by the elites, and that has caused a heightened risk of conflict and escalation at various times, right? On top of it, what we see, and we all know in Iraq, there's external actors as well that have contributed and have fueled a lot of these different contestations or fragility risks, if you will. And we will discuss the oil. Of course, oil is a big component in this framework that we'll discuss a bit further. But let's go a bit more deeper into these three levels of contestation. The first one is elite bargaining, and really in the post-2003 political system in Iraq grew out of an elite pact that was built on ethnic and sectarian identity. This was mainly devised in the 90s by exiles, and this system is otherwise called, for those that speak Arabic, the muhassasa system, which is basically a power sharing system that is to this day exists in Iraq. However, throughout the years, there's been this system was probably, however, different advocates of it may think that it was good. It didn't prohibit prohibit Iraq from going into a civil war in 2004, 2008, and then it didn't prohibit the insurgency of ISIS. So what we've seen throughout the years is also a shift from sectarian and ethnic power sharing towards more political power, political party power sharing and polarization. And what we see is that even the different identities, they're not homogeneous by any means, and And then we see political parties that really try to use the system to, in order to create this power sharing mechanism. And we also see, I mean, in different elections, you'll see that each political party takes less and less, share of the votes. And we do see that it takes quite a bit longer for the political mechanism to function in order to form a government. Another feature that is important in Iraq in this elite bargaining is the federal setup that exists in Iraq. Despite that being enshrined in the constitution in 2005, the institutional legal framework for decentralization remains incomplete. We do look at it a little bit in the report. This is a very important issue for the country, however difficult it may be to solve. We also, another feature is the contestation and negotiation between the political parties that takes place over control of the formal bureaucracy. And this has resulted in elite capture of state institutions. So what do I mean by this? This is practically from the debathification create a vacuum in the, let's say, in the main technical bureaucratic positions in the government, which was filled mainly by political appointees. And those political appointees, they're more accountable, let's say, to their political party rather than the minister of the day, let's say, right? So this has created this inefficient system that basically the formal bureaucracy is captured, but it's widely inefficient because you have cases where the technical appointees or the technical positions, they don't necessarily respond to the more higher level, and the minister, let's say, demands sometimes for reform, right? And finally on this, so the outcomes of the political settlement in Iraq and the underlying muhassasa system have been widespread clientelism, patronage, and corruption. Increasingly, the political elite in Iraq has tried to use this system of public employment, of widespread public employment, in order to also create more legitimacy. But as we see, this clearly has not worked, and this brings us to the second contestability, which we call social contract bargaining. Now, the current social contract has failed to meet the social demands and fueled growing discontent. As we mentioned, so in the post-2003 system, consistently parties and elites have used this system to, in a way, have used rent sharing from oil to create power sharing and create legitimacy by incentivizing public employment. Now, clearly, this this has not worked. It has failed on various dimensions, and at the core of this breakdown in trust, it's also, number one, caused a decrease in the popular confidence in the government. As you see in this chart, which is from the Gallup World Poll, you see that the confidence in the national government has decreased quite a bit between 2013 and 2019. Also, at the core of the social contract and its breakdown lie four, if we may say, like let's say four features. One is corruption and weak accountability. In many indices that you've seen, Iraq really scores pretty low on world governance indicators, other corruption indices, and this is really an important issue or problem for the country. The lack of employment opportunities is another part of this social contract and trust breakdown. Youth unemployment was estimated to be 36% in 2018 in a country that has quite a lot of youth, right? One of the most youthful countries in the world. And also, in the latest Arab barometer, almost all Iraqi youth, 95%, they say that they believe that personal connections shape one's employment opportunities. There's also issues of inadequate service delivery, especially when it comes to education, as well mentioned, and also basic government services such as water and electricity. And all of this has created the protests that we saw in 2019, which were also accompanied by coercion and violence. But for maybe the first time in a while in Iraq, what motivated protesters, and you see here the chart to the right, wasn't necessarily sectarian or any kind of ethnic divides, but it was really a will to change the political system and to have a country and a political system that provides jobs and for them and keeps them in a way satisfied to live in this country, right? So this would be the second contestation. The third, but not least, is this societal relations, or what we call social cohesion and horizontal inequalities. What we see in the last few years is that communal divides are lower. However, this is social cohesion remains weak, which means that this is fertile ground for sometimes elites to instrumentalize these divides. A majority of Iraqis, 64%, say the country is divided as opposed to unified in a recent NDI poll in 2019. And also the levels of interpersonal trust are at only 10%, according to our barometer. So there are these issues of cohesion and social trust that are important. And there's also certain regional and ethno-religious gaps or inequalities that remain significant. Now, in a broader literature in fragile countries, we know that inequalities between important groups in the society, groups defined by some identity marker, be it religion, ethnicity, language sometimes, they are in itself, they're not going to cause conflict, but they are an important risk factor that it could be instrumentalized to heighten the risk of conflict. So we study this in Iraq and in various dimensions. In a more monetary poverty dimension, what you see here is that there's really a polarization between the Shias in the south and a new poor group, which is the north, the Sunnis of the north, as compared to the Baghdad area and the Kurdish area, the Sunni Kurdish area. Now, another division that has come as a result of the ISIS conflict is or what drives this difference in poverty measures between Sunni, Kurdish, and the rest is really a large component of IDPs that determines this relationship. Now, when you look at non-monetary deprivation, what this chart shows in these various dimensions shows where each group lies in terms of the average the national average. So what you see here is that the Shia are group especially the worst, for example, in comparison in two dimensions such as sanitation and electricity, in comparison to the national average and the other groups. But this is masking sometimes this group, in a way, exercise or thought exercise that we did, masks also spatial inequalities. So what you see, for example, here in this graph is that basically there's governorates that such as Kirkuk and Diyala, which are amongst the northern governorates least affected by the ISIS crisis. They were significantly less deprived than the national average. This is in 2017. You also see other countries, other governorates such as Anbar and Salahuddin, which were significantly worse and deteriorating in comparison to the national average. So this type of analysis is not to say that because you have these differences, again, you are much prone to instability and conflict, but this is an important dimension for the government to, number one, study and to pay close attention to, because this at times, in not just in Iraq, in many other countries, has been instrumentalized and shown in the literature that is an important risk factor when it comes to conflict and instability. Now, the final part, which I didn't explain yet in that framework, is oil wealth, right? We see that oil wealth, Iraq's oil wealth or curse, has affected the politics of resource management in 4 dimensions. It's eroded competitiveness for the country, as Wael explained. It's created a little incentive to generate domestic revenue, as we'll see a bit later, and importantly through taxation. It's also contributed to what we call high government discount rates. And what this means is that for resource-rich countries, we see that a tendency for governments and incumbents to focus on reforms that are short-lived, right, or with a short time frame, rather than enacting some more difficult reforms where the benefits will reap in the longer term. And finally, we see still a dispute over control of rents and over the federalism, fiscal federalism, if we may put it, in the country, that causes this constant debate about different provinces still negotiating and fighting for their share of the oil rents specifically. So very briefly on this one, but from what we've just explained, we see basically that this state-society contestation, it has emerged as the new fault line in the country, and really this is also linked and driven by these 3 parts which we explained, which is the political fragmentation and the more if you will, sect political party disputes, the rapidly changing demographics, and the regional disparities. Development in Iraq, though, cannot be considered or conceived as only a state issue, right? And that's been part of the problem so far. But it has to, if a solution has to come in the more medium term, this has to go through the private sector. And development in Iraq as private sector has held back by regulatory and political factors. As you see here, in comparison to the peer countries, Iraq scores quite worse in terms of control of corruption, different governance indicators, or even doing business indicators. I'll give you just one example that when it comes to to evaluating the time and cost to trade across borders, Iraq has very few restrictions on cross-border trade. However, the time and cost needed to comply with import and export rules is much higher in Iraq compared to peer and neighbor countries. So then we go to what can be done to sustain future growth. And Wael said that basically we chose a middle path of giving specific recommendations while at the same time providing these more broader strategic pathways for the country, given this framework that we analyzed and we just discussed. And let me start by the first one is revisiting the political settlement and social contract. The first is to refocus the country's political settlement on development and restore the authority of formal state institutions over non-state actors. Only if the Iraqi elites is oriented toward growth and there's together with its citizens, only then Iraqis can enjoy peace dividends, as we call it. Institution building is a process that takes time, but the political elites should exploit opportunities to build coalitions or reform coalitions and develop mechanism for citizen engagement in the national dialogue. There's also confidence building signals that could be sent by the authorities in order to establish state presence, such as we've seen by the recent government when it comes to border crossings, for example. And another thing that could be considered is to build a new elite consensus and political vision around the need to reduce oil dependency and provide development benefits to its people. a second important bucket, if you will, in this same slide is to strengthen the management and allocation of the oil wealth and public resources. Things that could be done here start from very practical items such as increasing transparency in the oil sector, including in regard to contract disclosure, strengthening oversight and accountability of SOEs in the oil and gas sector, and something which is more difficult, which is settling these resource control disputes by clarifying the resource assignments by the different tiers of government. The third component, but not less important, is to restore this social contract, building confidence between citizens and government and addressing grievances. A few items again here: strengthening, fighting, corruption, especially what we call petty corruption, which is the one that most citizens feel would be important. This could be done through certain e-service delivery mechanisms. You could also give positive signals of confidence signals, one of them which could be the public disclosure of assets of high government officials. Iraq could strengthen citizen engagement in high-profile investment, public investment projects, especially in governorates where the government legitimacy is not that high. Another important factor which Shanta has worked quite a lot and proposed is to basically, which is a bit uncommon, if you will, is for the government to provide part of their oil revenues directly to its people through some universal cash transfer scheme, and then tax it back. By doing this, it really creates this feedback mechanism of taxation that really gives accountability, but also legitimacy to the government. And also responding to youth demands for jobs, it's something that it's very important, but at the same time, it needs this mindset shift that the government cannot be the only provider of jobs, but it really, in the more medium term, the private sector really has to step up. I have two more short slides. We didn't touch upon this. This is in the report. we can cover it in the Q&A, but basically two deep dives in the report were on the trade policy and trade facilitation sector. So Iraq could tap into these latent sectors, we call it. On the trade side, they can resume or increase exports of products that they once produced, and they also can become a regional transit hub. But they're far from that now. So trade facilitation becomes really important. And second, diversifying the agri-food sector and utilizing innovation and technology along the value chain could also be a way to, also as a post-conflict reconstruction strategy, could be an important sector that could provide jobs and diversify the economy away from oil. And finally, revisiting the economic model. We touched upon this, so I'll be brief, but Iraq in some estimates will only have oil for, I think, 80 to 85 more years. And this is assuming that this current status quo remains, right? So it's not taking into account the fact that the world generally is transitioning much more aggressively into a greener energy path, right? So it becomes really important for Iraq to diversify its asset portfolio by, number one, investing in its people, two, investing in its capital stock through increasing the non-oil investment rate specifically, and three, in its institutions. And the second is to inject more competition and contestability into the economy, which links to this argument that I was explaining before, that unless you do that, there's really little room for the private sector to be a bigger stakeholder in the economy. And let me end on a positive note. So if you were to remain with something from this presentation, I would say that there's a peace dividend, growth peace dividend in Iraq. So we showed you that only by not having conflict, Iraq's GDP would have been much higher. Two, not all is lost. So if you see here, I want to show you again the chart that Wael explained. If Iraq had the human and capital stock of other countries, the employment rate and participation rate of other peer countries, right? We're not talking about high income countries here. We're talking about upper middle income countries. GDP per capita would be 60% higher. So this is obviously something that's not going to happen in a year or two, but it's something that the country can aspire to. Apologies if I took a few minutes more, but let me stop here and thank you.
Thank you very much, Bledi and Wael, for the comprehensive presentation. I'll pass it to my colleague Shanta to discuss a few points. So Shanta, without any further delay, thank you.
Thanks very much, Joseph, and thank you, Wael and Bledi, for a very nice presentation. It's not my place to criticize the report since I was part of the team advising the authors of the report. It is a really a landmark report on Iraq. I should also add that this morning I got an email that said, economic diversification and growth in Iraq starts in 1 hour. And I said, oh, great, we're done. But that was an announcement about this, about the seminar, not about the actual diversification and growth. I think it's going to take more than an hour. Indeed, and as they say in the report, and I think Saroj and others mentioned it already, Iraq is in a fragility trap. And that's important to keep that in mind because small changes, incremental changes, are unlikely to get them out of a trap. You need a major shift, something that's going to be disruptive in order to emerge from this trap, because otherwise we keep sliding down. And as we have seen, they have done things in the past, they have made reforms in the past. Some of the reforms that they're talking about here have been tried, but they've been incremental and they've been moving backwards. And then when I look at the problems that they've very clearly identified, I just list them as competitive, the lack of competitiveness, or the declining competitiveness, and the lack of diversification, the pro-cyclical nature, what Bledi calls the high discount rate, is really that when oil prices go up, instead of saving the oil revenues, they spend it, and then when oil prices go down, they have to contract. The high public employment, the lack of taxation or domestic resource mobilization, the sectarian tensions, the poor service delivery, and the civil wars. Now, if I put all of this together and say, is there a common thread? I come back to the point that it's about oil. You can trace each of these problems back to the nature of the oil sector in Iraq. Indeed, I was trying to push the guys doing the report that they did this simulation, the counterfactual simulation of Iraq without civil war. I think that the real question you're going to ask is, what would Iraq have looked like without oil? Because the oil, while it's considered a source of wealth, and as Bledi or Wael mentioned, it's an upper middle income country by accounting standards because of its oil revenues, it's had such a pernicious effect on the society. And the main reason for that is that oil revenues, unlike other revenues, like tax revenues, goes directly to the government. And it gives the government an ability to use these revenues without being accountable to the people to whom it really belongs. That's the difference between tax revenues and oil revenues. Tax revenues, when people pay tax revenues, they actually demand that you do something with it. But the oil revenues are this mythical thing that just appears out of nowhere and has led to these kinds of problems. Particularly take this high discount rate. I mean, what does it mean? Why do you call it a high discount rate? Obviously, the government is spending faster than the people would like it spent. They would like it used for longer term projects like education and health, but the government wants to spend it on patronage-driven public employment. Well, why is that? Because it can get away with it, because it doesn't rely on the people for the money. So I really think that if we want to see some change, this progress along the lines of these very nice strategic directions, the question really has to be, why would they make these changes? As Bledi mentioned earlier, these have been proposed before, and they haven't really gone very far. They've been proposed in World Bank reports, I think, maybe even something that I've been involved in. And so I think we need to think about something really disruptive, a signal that the government shows that it is changing its ways. It is willing to make a commitment, which means that it has to be a cost to the government. And that's why I mean, I feel even more strongly than I said that I'm quoted in the report as having said that transferring this oil money directly to the public on an equal basis, a per capita basis, will send a powerful signal to the public that this government is serious about doing things differently, that it actually has understood the dividend that the report talks about, and they want to try to seize that dividend. But it's a big step for the government, and the government may not be, certainly most governments will not want to do it, but I'm seeing, they've been talking about this for a while, that there are other governments, including some neighboring oil-rich governments to Iraq, that are considering it. But I think in Iraq's case, this is not just desirable, but it's essential. Because I think, we know that the sectarian tensions are also a function of the oil revenues, because the oil is found in certain locations. And then the question of how it's distributed becomes the source of the conflict. But if it's a given that the oil will be distributed equally to individuals, not states, individuals, then it becomes a rule. There's no discretion in how it is done. There is no bargaining. The bargaining that comes about now doesn't have to exist if there's a rule for how oil is distributed. So my bottom line is that we really have to think about something drastic if we want to see Iraq change and not fall into a cycle of violence that it's been subjected to. And this may be one thing, because it is an oil country, but the oil has remained a major albatross around its development neck. And if we can help them get out of that, this may be the way to go. Thank you.
Thank you very much, Shanta. We will open it now to questions. Just send your question on the chat, or because there are so many people, I'm not sure I can see your hand raised, but go ahead, please. I know that my class had some questions on the report, so please go ahead. Okay, so we have a question from Mu'tasim Abu Zaid. What is the weight of sectarian and party muhassasa as a confounding factor in the post-2003 growth of corruption? And would the long-established network of patronage have caused the current pattern of friend-seeking regardless?
Joseph, do you want to collect a few, or should we go one by one?
Go ahead for the time being until a few others arrive.
Okay, maybe I can very briefly start, Wael, and you can add. I mean, for this, our first chapter, which tries to explain a bit these factors, right, that I explained briefly as well, we had some great collaboration with academics both in Iraq and also very well-known, let's say, policy scholars also outside of Iraq. So for this part, I mean, I can say that what the main factor that we see is that where the muhassasa has contributed, right? Number one is in creating the vacuum. The debathification created a vacuum, like I said, for these positions, and then this power sharing system has created a confounding factor that makes it possible for the technical appointees to be politically appointed for the technical positions that sometimes are not from the same necessarily political party of the incumbent minister, right? Because the ministers change more often than the technical, let's say, bureaucrats. And then you find that sometimes the technical bureaucrats or government employees sometimes in some spaces could have potentially more power than the minister, right? And creates this in a way this loop, another loop that makes it impossible to push even reforms that have to do with one individual sectors. And this is to me one link, but there's quite a few more that one could talk about. I don't know, Wael, if you have anything to add.
Yes, let me add. I think sectarianism since 2003 has been declining gradually and being replaced most by the muhassasa system because of the demographics now and the Shia party becoming more established as the ruling party, 80% of the population now. So really the rent-seeking agreements or this muhassasa, they shifted from, if you want, militias who were getting the rent out of having roadblocks or illicit things, into going into the actual administration, and as Shanta was saying, becoming, if you want, direct beneficiaries of this big oil wealth, and then distributing as they want. So we could really kind of talk more about the muhassasa system than a sectarian angle. Now, would it have caused more rent seeking regardless? I think the availability of oil as a big resource makes things even more kind of accentuates, if you want, or inflames this issue of rent seeking. Imagine in Iraq without oil, the economy would be much smaller and the divisions would have been less probable. I mean, I'll give you one number. Iraq is a country where its budget has grew to become $100 billion in size. So you can see how big this budget is and how political parties would then distribute this rent to their patronage system, to their people, etc., etc.
Right. I have a few questions, so let me. I'll give 4 questions. One is, could you please expand on the current state of Iraqi law on disclosure of finance by politicians? A second question is, how realistic is it for Iraq to move forward with these commendable recommendations, considering sectarian conflict, economic crisis, and widespread popular protest? A third question is, and sorry if I'm reading them too quickly just because of time, why are external actors not included in the figure displayed as a main actor? And the other question is, which is really more the practical, now that you have the recommendation, how are you going to make sure that these recommendations are actually adopted by the Iraqi government? And one last question, maybe given the time, one big question surrounding reconstruction in Syria are the role of new economic elites that emerged in the wartime economy. What lesson we can draw from Iraq on this topic? And then if there is any time left, we can come back and collect more questions.
Wael, do you want to start?
Yeah, let me start a little bit by answering how is this report going to be used. I think and then I'll go back to the other question. I think, as I said, this report constituted really the main analytical underpinning of a government that has been portrayed so far as a government that came after these popular protests and wanted to do reforms. They have created something called the White Paper, which is a national reform plan, which is, if you read it, it's a published document. It's a very ambitious document, but the most interesting part is that it's the first public document that the government adopts, which clearly talks about these rent-seeking approach, this patronage system, this corruption, and kind of paints not a rosy picture of Iraq, but rather a very bleak one. So they have put forward this plan, and automatically now that they started implementing, you can see how this muhasasa system has been bothered, and there's all these rows that are happening between the different parliamentary groups and the government. And the way they do it now is really through formal processes. Like, I don't know if you've been following the episode of the 2021 budget law in Iraq, where it has been blocked for really no obvious reasons, except that each political party wanted to improve its position and its share of the budget, as opposed to a government that presented something that had a little bit of the reforms that we were mentioning in the report on taxation, on public financial management, etc., but has been diluted throughout the process, and now it's stuck because it called for early election. So really, these actors who are linked to the external actors, I think we've talked about external actors. There is a big role for external actors: Iran, Turkey, Saudi Arabia, the US. So everyone is involved and has connections inside and fight openly. So the way we're trying to do it is we've put together a international support group, basically the Iraq Economic Coordination Group, which is the World Bank, G7 countries, and other institutions, the EU, to try to put a financial package that would come with those structural reforms. And we've identified areas where, you know, the government could get quick wins: financial sector, business environment, which are big reforms to do, pension reforms, where you can get this political agreement, get this quick wins, and then capitalize on those wins going forward, and capitalizing on the fact that you have a population that is no longer in fear, a young population that is on the street protesting. The message that this report sends, and then or the discussion that is happening on the policy part, is that given all these accumulation of bad policy making in Iraq, we are at a point where budget rigidities are very high. So even at an oil price of $60, you can't pay your civil servants and their pension. They became so big that the state cannot hold them. And you have the fastest growing population, very young, 40% is below 16, but then you don't create any jobs. So really the market dynamics, if you want, are starting to impose reforms on Iraq, or adjustments on Iraq. And whether a government could make a predicament and, you know, act on these pathways for growth, which we talked about, then they would be able to soften the impact. But really going forward, with the decarbonization happening, with all the rigidities that have been accumulating, so the muhassasat have reached a critical point. There's not a lot of things that they could amass. They have a huge population, a huge young population that is very connected. What do? Reforms will have to be imposed on them, and I think this is why it's an opportunity now to do these reforms. On the law, on the question on whether the law on financial disclosure of finances by a politician, they do. It is, I mean, it is there. They have this Hay'a al-Ulya lin-Nazaha, the High Council for how do we translate Nazaha, High Council for
integrity.
Integrity, High Council for Integrity, which, you know, you're just adding layer of layers above layers, which you know, reduces the integrity of the whole process and the fighting for corruption. So you can really, I mean, you're a politician, you could really present your papers, but, you know, nothing happens. So accountability is not there. But the last point on what you learn from the Syria and reconstruction, I think the best thing I've learned since I started working on Iraq is that no matter what you do, it is always better to work through the institutions and through the governments and have government presence. I mean, probably in Syria, the reconstruction, I mean, it's either going to take an institutional setup, or maybe those small warlords become themselves the institution. So how do you prevent those militias going into those, or thugs going into the institutions, and how you can pick winners inside those institutions? I mean, not all Iraqi, I mean, the levels of corruption are high, but not all institutions and technical directors are corrupt. So there are still some people you can bet, and with the proper international support and oversight, you can go on with the reconstruction. The bank did 5 bridges already. I mean, it's excruciatingly slow, but at least things are happening. Bledi, I don't know if you want to add.
Very briefly, I can try to combine the answers on the different questions. So I think there's a saying that says, like, never waste a good crisis. I mean, some people attribute it to, I think, to Churchill or others, but this report was written mostly before COVID, and then it was published last year in end September. However, most of the work had happened till June, right? So most of the reforms and the discussion we do, it comes before that, right? But in that spirit, I would say that this last, let's say, crisis, which is of unseen, unseen magnitude, right, from before, really gives Iraq an opportunity to use it as a way to implement some very difficult reforms. So this is the first one, which they haven't done in the past, right? In the past crisis, when I would say the 2015, 16, 17, right? They had the ISIS war, but at the same time they also had an oil price crisis. There were some reforms that they tried to implement also with the help of the World Bank and the IMF. Unfortunately, those reforms dissipated as soon as the oil prices started increasing, right? So the idea is about trying to implement reforms that could last an economic or a cycle or an oil price cycle. The second, on the external actors, I would say the approach we tried in this report is to take the external actors as a given. We know who they are, we know what kind of influence they have, but given that they exist, what can Iraq do in this political economy / growth nexus, right? So quite a lot of the recommendations we say, we don't try to necessarily change the dynamic. It's not and this is for Iraq and broader, right? It's not part of the World Bank mandate, certainly, but it's we take that as a given, and we try to work it in our framework. And just a small point on disclosures. I mean, this is something that both the bank and the IMF had, I think, either some technical assistance or we were trying to have the government implement this. It's been done in other countries, I think, even in the Middle East and North Africa region. And it's one of those things that it's, from the technical standpoint, it's very simple, but it just needs a government that, under the current political economy framework of the government, to be willing to implement it, at least start to implement it, right? So let me stop here.
Thank you very much. We have come to the end. So all that is left for me is to thank all our presenters. First was Saroj, and then to the two main presenters, Wael and Bledi, really many thanks. I know Shanta has to hop to, I think, to a class. Thank you very much also to Maddie Fisher for her organization and coordination. Thank you all, and hope we see a better Iraq in the next few years.